East Coast time. What's today? Wednesday. Every day kind of seems like they overlap. They're all similar days. So it's Wednesday, April 1st. As promised, we are trying to bring everybody as up-to-date information related to what's going on in the local real estate investment community. That's what we focus on this show. We don't necessarily focus on coronavirus or a lot of other unfortunate things. We want to be optimistic. We want to share our opinions, but at the same time, we want to be optimistic of what's going on in the real estate market and bring everybody up-to-date info as we see it kind of in real time. So a few things we're going to discuss today. We're going to go through some essential and non-essential businesses, mostly as they relate to real estate in general. Obviously, these are our opinions, the way that we have read it through some of the stuff that Hogan's released, as well as some people related to Maryland Associations of Realtors. So we're going to talk about that. Then we have Jack Resnick on the line, and we're going to bring him up here soon. And he's going to talk about how owners of rental properties are dealing with their individual tenants that they have and the move-in process. And can tenants move? Can they move in? Can they move out? You know, what's going on with rental properties and tenants in particular related to that. And we're going to end with what we have been seeing locally inside our community, mostly focused on the DMV and what we've seen locally over the last few days as things have changed inside our community. And we'll bring all that up to date. So cool, Ian. You ready to roll?
Yeah, let's rock and roll.
Let me bring Jack up here real quick. He's on the line. Let me unmute you, Jack. There you go. You good, Jack? Can you hear us?
I'm good. Can you guys hear me?
Yeah, what's up?
Yeah, we're good.
Awesome. First of all, thank you so much for having me on. I appreciate it.
Absolutely.
So I run a company called Platinum Realty Advisors. We specialize in consulting and leasing, specializing in the voucher market. So just want to talk about that a little bit, how the market has changed, what our clients are doing to make it through this time, and then, of course, what our tenants are doing and if new tenants are still hitting the market. So we were very fortunate that our market didn't really feel the impact of this until really this week. This is the first week we've been seeing that tenants are a little bit more reluctant to come out and see properties in person. We've implemented virtual showings. Hasn't really been, we found it tough for tenants to commit just based on, pictures, videos, or even a live video walkthrough. We've been doing what we call safety showings, meaning that one agent shows up with one tenant, opens the property, turns the lights on, the tenant walks through, and basically no contact, nobody in the same room at the same time. But again, it has been slowing down a little bit. As far as our current clients, what they're doing, the value of voucher tenants and voucher programs are really showing themselves now that, HAP payments are still going out as scheduled. And, thank God most of our landlords are still doing okay. We've been reaching out to any of our tenants, any of our clients' tenants that have large rent portions, and just making sure that, if they did lose their job or they got furloughed or laid off, that they are submitting the proper change of income information to the respective housing office. The housing offices on their part although they're working remotely, are still, processing any changes of income reasonably quickly because of the situation, meaning as long as a tenant files for a change of income, let's say today, their rent portion will be adjusted for May, which should make it a little easier on them. Then, of course, our landlord should see a nice increase in their HAP payments, which we, of course, hope will allow them to continue to pay their mortgages. And then when all this is over, still have a solid cash flowing, performing portfolio to be able to leverage for, to continue to buy rentals. Some of the things we've been doing now, we're trying to get tenants in the door, basic move-in incentives. It's just like reduced security deposits. Sometimes we the security deposit if the portion, if the voucher tenant portion is under, a certain amount that we feel comfortable with. We've been holding properties now for 30 days with a holding fee as opposed to our usual 7 days. So pretty much just doing everything we can to market as much as we can, build our lead list as much as we can, and make sure that once this is all over, we'll be able to move, as quickly as possible to place these people and get all our landlords' vacant properties filled quickly. As far as the market itself, there's still plenty of voucher holders looking. It's more about they're reluctant to come out to see properties, but there's still plenty of active voucher holders. And we think that once this opens up, and the Baltimore City Housing Office reopens, there's going to be a massive flood of voucher holders on the market. It'll probably be an administrative nightmare for the first 30 days for them to get back on top of everything. But ultimately, we think it'll translate into a booming voucher rental market once this opens up. Just to run you guys through the voucher programs real quick. I mean, Baltimore City Section 8 is currently closed for new business, meaning all inspections are canceled and they're not processing new RFTAs. However, they have been allowing us to sign leases. That's been done remotely. The specialists have been emailing all the documents. We've been signing leases with tenants and getting HAP contracts processed. That's really, really good news, especially for most of our investors whose bread and butter is in Baltimore City, that we can still somewhat, continue to operate for now. Baltimore County Section 8 is still fully operational. They've been great. They're an extremely efficient program, and they've been processing vouchers quickly. Initial inspections, annual inspections are canceled, but initial move-in inspections are still taking place. And we've been, from when we submit the voucher until we sign a lease for Baltimore County has been, on average about 7 to 10 days, as opposed to the usual 2 to 3 weeks. BRHP, which is the Baltimore Regional Housing Partnership, I'm sure most of you are familiar with. Even though they're working remotely, they have been pretty efficient also. They're still continuing with initial move-in inspections. Annual inspections are canceled, but they are still processing new RTAs, and they're allowing new business to continue. And it's really day by day. As far as tenant placement are concerned, we had to have all of our leasing agents that have families or wives at home kind of take off, and we have our guys that live alone that are still working, and just being extra careful on the showings. Pretty much doing everything we can to get people out safely, and just make sure that once this opens up and the housing offices hopefully go back to normal, like I mentioned earlier, we'll be able to pretty much have everything ready in all aspects. We've been taking advantage of the downtime as well for more agent training. We've been making sure that any of our current listings that we have are ready for any voucher inspections once they reopen, just to make sure that we can be as efficient as possible once, and hopefully things get back to normal soon.
Hey, Jack.
And that's yeah.
Yeah, I was going to say, you're dropping bombs left and right, and we're not getting a chance to deep dive some of these things. Just real quick, man. Everything you're doing, like usual, is usually always above board. And first off, I want to say a big shout out to Jack and his company of Platinum Realty. They do a lot of our tenant placement, very super efficient, even when times aren't like this. From handling inspections to getting tenants placed, signing leases. One of the things that you brought up early on was virtual showings and safety showings. Now, interesting enough, before all this was going on, I know you mentioned a few times that tenants were starting to become receptive of this idea prior to this. Is this something that you see to continue past, like once all these bans or whatever the heck you want to call them are lifted? Do you see this as a wave of the future of being able to do virtual walkthroughs or live video walkthroughs with some of your tenants?
So it's a great question. I think in the past we've been able to do it because they always know they had the option of seeing it in person, and any virtual showing that we had to do were usually done with tenants, moving from out of state, or with handicap issues or accessibility issues that they couldn't come and see the properties themselves. It's becoming more and more of a necessity. What we've been trying to do is be as thorough as possible on the walkthrough, and then have the tenants kind of drive by the property themselves and kind of take a look at the exterior, the block, and the neighborhood is really the toughest part, especially in our market, to sell a property without somebody actually seeing it. It's a great question. I think renters will be more inclined to commit based on virtual showings as opposed to buyers. So I think that, possibly like technologies like Matterport and all these really cool 3D walkthroughs and I think the quality of the virtual showings is going to have to keep going up, to be able to get people to feel comfortable enough to commit based on a virtual showing. If that continues when this opens up, I think that still remains to be seen. I hope not.
Yeah, no, it would be interesting to see. And I know Jason and I have been talking to someone that does staging. The question is, if these virtual continue, does virtual staging make a comeback? And even in the leasing world, something else that you brought up, and I know we combat all the time in the city, is doing the lease signings prior to getting down there. And the county's adopted this already, that you do your lease signing and you can just email it to them. I don't know what we need to do, and I know you would agree, but let's hope the city continues these advanced forward paths. Has there been any talks from any of the caseworkers or the heads that this is something that's thick, or is it just a day-by-day basis?
It's really been day by day. Of course, any of my clients that I speak to, and let them know how we've been signing city leases. That's the general feeling. We all want it to continue like this. It's funny, Baltimore City Section 8 has been more efficient closed and working from home than they do when they're open. So we hope that they're taking note of it. We haven't heard anything, concrete. The case specialists are really usually the last ones to hear about what's going on. So we try and stay in touch with, with the head of the inspections department, leasing and contracting, the integrity department to really, keep an eye out for any long-term changes. But I think at this point for them as well, it's really just day by day.
Yeah, no, I hear you, and I know they're always the last to know, but they're the ones that make the world go round. And in the years past, I know we've both been at meetings where they talk about, we're going to make advances forward, and I really hope some of these things force that hand. It's been a common theme. Real estate all across the board is very antiquated, and I think this is a chance for it to move to the future. Now, something else I know I heard you just say inspections is self-certifications. I don't think enough people utilize them often enough for those that have subsidized housing tenants. Hopefully this is something that sticks more, that they say from here on out, if you have 5 or less items that are non-life safety, the only way we're going to accept it is by self-certification. I don't want to see anyone lose their job because of less inspections, but I would hope that it would help people do better quality, that the inspectors do better quality inspections going forward. Has there been any, what have you heard on the inspection front? Have you heard anything from any of the programs besides just the self-certification?
No, nothing. As I said, Baltimore County, BRHP, MOHS, or I should say the NBQ inspectors that handle inspections for a lot of these third-party programs like, Catholic Charities, Healthcare for the Homeless, they're still operating. So what's nice about Baltimore City is usually they only allow the self-certification form for annual inspections. Now they've been allowing it case by case, of course, but now they've been allowing it for initial re-inspections as well. So if you do have a property, let's say that passed, before March 27th when they closed, what you can do is, of course, it still has to be, 5 to 6, 7 minor violations, but you can complete a self-certification form, submit it together with pictures. It's very important that you have pictures of all of the corrected violations. That's their only way that's their only proof that they have that the work was actually done. They may ask you to send in an invoice for the work if there was any electrical work or violations that may be tough for you to actually show them. But we have been successful in getting a couple Baltimore City properties past inspection, utilizing these self-certification forms. It's extremely efficient. It's just really important that if you do go that route, just make sure that you have pictures, an invoice from your contractor or electrician ready, just to make sure that you have everything they need and they can, hopefully get you the answer they want as soon as possible. But Ian, like you mentioned, we hope that this continues and, the quality of the inspections and inspectors kind of changes if this policy continues.
Yeah, I hear you. I just hope it's a move to the future, and it's sad that it had to come to this, but there's a lot of good things that are happening out of this. And ultimately that it's better for the tenants and the landlords, in the grand scheme of things. You want to give, you got anything else that you want to mention, or you want to give your company a plug?
I appreciate it. No, I think we really covered it all. Again, for those of you who don't know me, we run a company called Platinum Realty Advisors. We've been in business for about a little over 7 years now, working with Ian for probably 4 or 5 of those. We've placed over 5,000 voucher tenants, Baltimore City, County, and the surrounding areas. Feel free to shoot me a direct message. If you do have any questions, we're always happy to answer any questions that even non-clients have during this time, if it's voucher related. And then, of course, if you do have any properties that you'd like leased, we're definitely the guys to talk to.
Yeah, man, we appreciate it.
Cool.
Like I said, Jack.
Thanks for having me, guys. Thanks, Ian and Jason.
Yeah,
Appreciate it.
man,
Hey, no
just
problem.
put it in the message so people can see your name, and definitely reach out to Jack.
Yeah,
Sounds
put your stuff in like Ian said in the messages, and we'll run this chat and we'll go from there. Appreciate it.
Will do. Thanks, guys.
Appreciate
Be
it,
well.
man. Yeah.
Yeah, Ian, I was going to there was a bunch of stuff I was going to go through, but he went through all of it so darn quick, and he's right with it. So I'm going to guess that tenants in general are probably moving more out of necessity right now than, hey, I just want a nicer or different location. Is that what you're seeing internally as well?
Yeah, it's definitely a necessity. Emergency moves. Those that are downsizing, we haven't really seen any effects. Granted, today's April 1st, so we have got to process the rent. Everything else
Exactly.
But my guess is that it's going to be necessity moving. We just got back from a property we have out in West Virginia. Same thing. We have a few vacant units out there that we just finished turning over, and our property manager out there, he said he still has showings, but things are definitely slowing down a little bit as people starting to see work collapse. And there's no quote unquote future. Virginia just extended. Not that I want to get into the whole Corona thing, but Virginia just extended till June 10th, I believe. So it could be real interesting over the next few months. But right now, out at that property, our property manager said that he's still able to get showings, and we're able to move forward. So that's
good. It's interesting. So we had over the last week, we had 2 calls from existing tenants that had leases expiring, and we're planning to move out. And both of them asked if we could just do an extension, either month to month or a longer term extension, which obviously we're happy with, and I think they're happy with. I don't think at this point that's a life decision that they want to have to spend time on, is where they're going to live if they're already happily kind of in a place. So we did lease extensions, and that worked. And again, I know a lot of your tenants are in some sort of subsidized program. A lot of, I would say about 75% are subsidized programs. We should bring on somebody soon related to that, just mostly as retail tenants, because I'm curious to see what their stuff is, because most of our stuff is paid the first of the month. Obviously, all of our subsidized tenants, none of them have 100% subsidized, so they have their own contribution that they got to put up. But yeah, time is going to tell with everything. Starting this month, April 1st, what happens with rent payments. We're going to find out what happens with mortgage payments, and we'll see what the effects are in the business. And one thing that you mentioned earlier related to they're extending stuff into June and in West Virginia on that multifamily you guys have is there's indicators by a lot of people that the DMV is going to get hit pretty hard very soon, close to around Easter time, similar to what New York's going through, North Jersey's going through, and Philadelphia is close to be going through. And as we know in the this is not all Pennsylvania, but Philadelphia in general, I mean, a lot of their stuff shut down. I mean, you can't, if you're a real estate agent, you cannot list the property. The MLS is completely on hold if you try to put a new listing in, so that's off. Construction is not essential up there like it is down here, so you can't do any construction down there. So all of us are up there, I should say. So all of that makes a big difference. And as industries close in general, that has a big determining factor of what's to come. And obviously, time will tell how long. And we've talked about this a few times on a few different webcasts, but really, when it comes down to it, the strong are going to survive. If the well-established businesses that have a good infrastructure in place and have good cash reserves that can weather the storm for a longer period of time, I think most of them are going to be fine. Now, don't get me wrong. There's potentially a good-sized dip in the business, but they have a strong shot. The weak are probably going to get wiped out if they don't have a lot going, and then the medium size or the middle of the road, will be hit or miss.
What's Warren Buffett's quote? When the tide goes out, you see who's swimming with their pants off. I mean, again, it's going to be 18 to 24 months until we see the fallout on the where you're going to see foreclosures and those things, because we don't know how long this is going to last.
Possibly. I mean, I've seen a lot of different things. I've read a lot of different things. Some are saying that this isn't going to affect as much. Number one, it's going to be market driven, related to what metropolitan area that you live in. That that's obviously a big thing, and that was a big thing in '08 to begin with. But also, one of the things I heard from who did I hear that from today on CNBC? But they were talking about mortgage delinquencies, and it seemed like FHA is starting to have the most mortgage delinquencies because the barrier to entry to get into a house with FHA financing, you don't need much cash down. Credit requirements are a little easier. Those are kind of starting. And then Fannie and Freddie, they said, I think one of the agencies had, I don't know, a few 100,000 calls in this past week. And most of them were not necessarily like, I can't make my payment. It was kind of just asking for advice of like, what do we do in this situation? But, I think as a whole, if you didn't have good credit in general and you didn't have some cash reserves, it was hard to get a mortgage to begin with over the last few years. So they were saying that a lot of their inquiries were from good credit clients and good credit borrowers that eventually will make do. They just need some breathing room right now. They either lost their job or it's not in their budget to make payments, and they're trying to figure out workouts, maybe put the money on the back end or something. So like something like that, if that's and I'm not saying that's going to be the worst case scenario, but something like that, if that's the worst case scenario, hey, I can't make payments for 3 months or 6 months. Let's just put it on the back end of my loan. Like that's a great worst case scenario. I'm not saying that's going to be the case, but that would be the best worst.
Sure, but I'm gonna take this thing down a different road, and you're probably gonna get maybe a little mad at me, but sure, Freddie, Fannie, what is it, Jin May or whatever the heck the other one is they're all federally backed money, right? You're talking about the difference between a servicer collecting a payment and whatever institution wrote the money. But, what about the community banks? What about, the landlords, that make the little portfolio guys like us that, have community bank financing, and you're saying no evictions, right? Like you have people and assets that, aren't treating the property right or not paying is, there's no legal recourse, and government just comes in and says, boom, you can't do anything about it. And this goes back to why over and over and over again I say, again, you should have some sort of reserve. And I know most real estate investors don't, because it's very easy to take your capital and continue to reinvest and just say, well, I'll always be able to print cash, or I'll always be able to rent out that next unit. So that being said, it's, that's the scary part out of all of this, is that they say no evictions. I was just talking to our property manager out in West Virginia, Donnie Fisher, and we were discussing it. He said that the Attorney General already sent emails and letters to all property management companies and landlords, basically more or less, he didn't want to say a threat, but coming out and saying that, they can't believe that anybody would utilize this situation to evict tenants, right? And with that being said, it's kind of like, well, sure, like we're not utilizing the situation to evict tenants, but if there's cases that are going on prior to this whole pandemic that we're going down this road because the renter wasn't right or the borrower wasn't the right person, so that I think that's more what some of the concern is for the operators out there,
Yeah, I mean, whatever is already in place right now, whatever bad loans, bad tenants, bad whatever were written, irresponsible debt that somebody took on themselves, like that's over. That's in the past. Like that's defense at this point, and clean up. And you're right. Like if there's a community bank, and keep in mind, community banks are still very regulated, and they still, for the most part, have to make as smart as possible loans. But in general, if they didn't write smart loans, they're fine. For the most part, they'll be fine. And if you got too aggressive, they're going to run into problems. But let's be honest: the smart real estate investors, the smart lenders, the smart landlords that have the right debt in place, they have the right tenants in place, they're going to still have issues. Don't get me wrong. Everyone's going to have issues, but at the same time, they're going to weather the storm better than everybody else. And that's what this is all about. Like, it is an unfortunate situation, but, let's say you bought a rental property and you got someone to give you 100% financing or 110% financing, and then your tenant doesn't pay you, and then you can't pay the bank, and then something else happened. Like, it just goes down the line, right? The whole supply chain is screwed. And then you multiply that by 5 properties, 10 properties, 30 properties, it screws you even more. But like, again, it's an unfortunate situation, but some of that was irresponsible potentially on the investors end on the front end, the lenders end on the back end. Like, everyone's got to protect their best interests, to do the right thing. And again, there's only so much you can protect. Let's say you're an investor and and every property you buy for $100,000 and you put $50,000 into each one, and you only have $50,000 debt on it, and you have good high credit score tenants. You still could run into problems. So it's not like a foolproof. You just do the best case that you can.
Yeah. No, I mean, I definitely agree. It goes back to your business model. Look, we could go down this road of all the bad stuff that could potentially happen, and I think there's enough of that out there. Should we talk about something good that's happened in your business in the past 24 hours? Do you have anything? Because I got something.
Yeah, I mean, listen, I'm very optimistic about everything. And
one specific good thing that happened in your business in the past 24 hours that you converted.
I've got a lot of good things. They happen every day. So let me tell you, in our business, and I believe in every single person's business that's buying assets today, who's buying real estate or doing loans or buying something, the asset you buy today is better than the asset you probably bought a week ago. It's that simple. The loans I write today are better than the loans I write a week ago. Now, tomorrow, the loan I wrote today might not be as good as they will be tomorrow, but who knows? So if I wrote $100,000 loan today, we've been closing on loans every day still. If I closed a $100,000 loan today, chances are I would have lent that exact same borrower, that exact same client, whatever, 110, 120, 130 2 weeks ago. And today it's at 100. And guess what? Tomorrow or a week from now, we might only decide to lend 90. So if you're a real estate investor or a lender or anybody who buys assets in general, investments in general, the best part about this business model is everything's individual. You do it all. It's just like buying anything. You underwrite it and you base it off whatever your threshold is and what the going rate is today. So we've written some very, 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 very good loans to a lot of good clients, and we're in interesting times right now. I mean, any of these institutional lenders have backed out of the game. Through capital markets, their funding got pulled. So if you have access to private capital or hard money that's using private capital, like those are the best options. You can tell me in a second. Let me give a high five to Mike Casey real quick. New self-storage facility locked up. High five, Mike. What's up?
Yeah.
I can talk about something positive that happened today. Besides that, I heard you drove 2 hours for some unknown reason to West Virginia.
Me? Yeah, no, that was positive. No, yesterday we drove to DC yesterday to drop off a closing package and sold a 10,000 square foot warehouse that we've had.
So that's settled. That's settled.
It's
you have money. You have money in your bank account.
We have money in our bank account.
Okay.
Jim wants to give him a shout out because he thinks he did something in the deal. Meanwhile, me and Dan had to drive down to DC. But either way, Jim got it done.
Yeah.
He's on here. Let me know how nice my double chins look, even though we got our money. So, but yeah, no, that's finally done. It's good to know that real estate deals are still getting done. I mean, that's the bigger picture of it. That's a positive, and we have another 8,000 square foot warehouse that we're looking to sell, and he's still actively got showings on it. So there's still positive activity out there, and that's the exciting part in everything. It's very easy to look at the negative, and if you just keep looking at the negative, it's just going to get more and more negative. Now's a great time to wipe out social media. Hey, the casino's closed. Come on, man. Anyway, but
Ian shouldn't even be driving to begin with.
Yeah, no, actually, I got driven today. It was exciting. Andrew Tucker took me for a ride, but no, it's if you go negative, it's easy to go down a negative road, right? Like like what they tell race car drivers when they're going to crash, they don't look at the wall, because if they look at the wall, they're going to hit the damn wall. So. And now's a good time to look forward, keep things moving, protect what you have, make proper decisions, but keep looking forward,
Yeah, listen, we've talked about it every time we do this. I'm very, very optimistic. Now, that being said, and I'll talk about that in a second, but that being said, like, there could potentially be a lot worse things coming in the near future for what at least their predictions are. And again, like, that's got to be put into consideration when you underwrite a property or underwrite a project or do whatever. Have a listing with, have a listing. I was talking to somebody the other day who just listed a property, through our buddies at Northrop Realty, and they're unsure if they want to put it active now or if they want to wait a few more weeks before put it active, because they're uncertain about what's going to happen. But and if there's any agents on right now and they want to hop onto this webcast with us, just chat me or just chat through here and we'll give you the link. But I'm curious a few things of what you're seeing related to, it seems like buyers want to buy right now, and sellers haven't for the most part lowered too much. It seems like there's still a lot of activity, but I'm curious for any agents what you've been doing related to proactively sell properties when you can't get inside them right now, like what your game plan is. And if you chat us, if you comment, I'll send you the link and you can hop on live for a minute with us. But in general, heck yeah, we're optimistic with all of this. And again, like another thing we've mentioned, if you buy an asset right now, if you buy a property right now, if you write a loan right now, you better be sure that you like that number today, tomorrow, 3 months from now, 6 months from now, 2 years from now, because for the most part, that asset might stay on your books. You might still own it. Even if it's a flip that potentially you can't even unload, like guess what? If stuff goes down and they lock down stuff worse than it is, and all of a sudden construction's not, an essential business, because construction is not an essential business in Philadelphia. So we're writing loans in Philadelphia, but we're smart about the way that we're underwriting them, knowing that chances are we're giving ourselves a 4-month buffer of construction might not even start for 4 months. Are we still going to be in a good spot? So, as long as the numbers work, it works. And one thing that, I love about someone that buys rental properties in general is you own a property, you buy it today for $100,000 and you lease it out, let's say for $1,000 a month, whatever it is, you buy it for 100, you lease it out for $1,000 a month. Tomorrow, if that property is worth $90,000, it doesn't matter. It honestly doesn't matter if it goes down to zero in the short term, as long as it comes back up. It just doesn't matter. Like equity is a fake number. It is a fake number. Equity is a fake number until you are ready to trade that property or buy or sell that property. So it doesn't matter. Now, if your intent is to buy a fix and flip and construction gets locked down and other stuff happens and you can't unload it quickly and that's your game plan, you're going to run into problems.
Yeah. No, and that's the advantage to everyone's business model, is how you're producing your income. So I did see, sorry to change gears. I was moving my head to another thought. I was speaking to Jason Schwartzberg from Maryland Energy Advisors. He was actually on a webinar yesterday with a few Goldman Sachs guys. And he's gotten a in-depth look at the PPP plan that's coming out, the payroll protection plan or whatever they're working out. He's also working on, he doesn't want to come on the webcast yet. He's definitely going to do one with us to discuss it. He wrote an article, I'm going to pop it in the chat, and really breaks it down for a business owner. The reason he doesn't want to jump on yet is he still wants to understand more about the sole proprietor stuff that's available in the forgivable loan, so he can fully discuss it. But there's a lot of good information in his article, what type of leverage you can get, how it becomes forgivable, and how you can take advantage of it inside of your business, whether you have a business or a real estate owner or whatever you may be. There's a lot of advantages to it. So I'm going to pop that link up here.
Yeah, post that. I did a lot of research on that, and I'm hoping that he'll be on this sooner than later, just because I'd rather hear from him than us hear based on what our understanding is. But when did he write that article, by the way?
Literally yesterday. I think he did the webinar yesterday morning and then jumped on it yesterday, or he wrote it yesterday and then sent it over to me. And he's like, take this for a read. And it's a really, really good read, because sure, there's banks out there, everyone's pitching it right now. You got to go through your SBA lender. However, reading it and understanding what you're getting involved in is super important. I know we did go through the process on a few of them just to see what it would take and get done. Now, the PPP is not available yet, and I think that's why there's so much misunderstanding about it. Until
Friday, right?
Yeah, Friday, and I think it's going to go through till June 30th. But I think until anyone actually understands the application process and what's going to roll out will help. So we're shooting for Jason early next week to jump on here and discuss it. So I think it'd be really, really helpful. So
yeah, Chris and I did a lot of research on it today, and our bank reached out to us. Your bank, and I know your bank reached out to you as well, because I think it's typically the bank's responsibility, not their responsibility, but they want to be proactive to try to roll this out to their clients. So
yeah,
we got the rundown, and like I feel like I understand it pretty well, but it'll be good. And things are changing. Like we've had 4 edits over the last day of, oh yeah, this is an edit, because it's unknown yet until it happens. But it does seem like there'll be a relief for a lot of people, so that'll be good.
Yeah, well, and there's also, I believe there's mortgage interest. Well, there's mortgage payment relief, but I believe it goes against mortgage interest, your leases, your payroll, everything.
And utilities. But I think a payroll has to represent 75% of it. So all the lease and other stuff can only be 25%. So I think if you have let's say you have one employee, they pay $5,000 a month. You pay them $5,000 a month, but your lease is $5,000 a month. Like, you're only going to get a certain portion of your lease. You're not going to get the whole thing.
Right, and you're only getting a certain portion forgivable based on how the funds are quote unquote utilized. From my understanding, that article does a hell of a job explaining it. So
yeah, no, I'll take a look at that too, because I've been following along, obviously, because that's important. So all right, let's talk about real quick some essential businesses in our interpretation, and then we'll end the call there, and we're going to circle back. Who do we got tomorrow? Who are we doing tomorrow? On this.
I think Andrew Tucker is going to jump in.
Perfect. Oh yeah, perfect. No, he's a good one, because like he has to go in properties on a regular basis, and I'm curious to see what he does related to, like, safety stuff, what properties he's allowed to get in, what properties he's not allowed to get in on. Things like that.
And I think if there's any other contractors on here, and you're doing work inside the homeowners' homes, it'd be great to hear from you guys as well. Shoot Jason or myself a message, and we'll get you the link, and you can jump on. Andrew does a lot of work for contractors, so is he affected or not? I guess we'll find out tomorrow. So
yeah, exactly. Okay, so from what I saw, it was interesting, because I didn't think originally real estate agents and real estate in general was an essential business. On our end, hard money bankers, it seemed like it was, because we're a non-bank lender when that original announcement came out. But now I'm looking at something from Maryland Realtors, from President John Harrison, and he posted, and I'm just looking at this other screen right here related to it, that while real estate might not be considered an essential business under federal guidelines, this does not mean we don't operate business as usual. But he stated that, I guess, real estate in general, like, I think from what it looks like, at least, that real estate agents are allowed to be active, and they're actually, I think, allowed to go into the house. But like Jack was saying earlier, you can't have a homeowner or somebody who wants to buy your house go into the house. The homeowner obviously can be there, but like, if I want to go buy a house and I'm buying a property active, I'd have to rely on my agent to take pictures for me and things like that.
Yeah, I think that's what I've heard from a few people that are actively doing showings. I know someone was saying that
I'm going to post this link on here too.
Yeah, that nobody can have. I was having issues opening that link, but anyway, it seems like that you can't have any overlapping showings. I don't know if they've gone to the extent to not allow you to put up new.
No, but I don't think you can show it. I don't think you can home up.
I mean, look here. Someone brings up a valid point yesterday, and I guess this is where I get confused. And I know I'm supposed to be helpful in this, but this is really where I'm confused. If title companies are considered an essential business and they can process real estate transactions, then the rest of the real estate model needs to be open. And if the rest of the real estate model is not open, then everything else should be shut down, right? Like, that's kind of how I view it. So I get it, banks or financial institutions, and they can write. But I don't know, man.
That link didn't work. I had it up. It was cached from my system, but it doesn't work now. I mean, I don't necessarily agree with that. I mean, obviously, it's for public safety purposes, and they don't want people to come into the house and potentially take advantage of it. So, we'll see what happens. I mean, one thing is like, for instance, like the property that we have under contract that we're selling, the home inspection got done ahead of time, right? Or was done like a week ago before this happened. So the home inspection's done. The buyer's already been to the property. They know what it's going to look like. the only unknown is like final walkthrough for the most part. I'm allowed to get it's vacant, so I'm allowed to get my contractor to go in there and fix the inspection items. So it's just a matter of, it's just going to be a matter of, I guess final walkthrough if they're comfortable with it or not. But I guess we'll see. I guess we'll see what happens with some of that stuff. I mean, there'll be post-occupancy agreements. There's going to be a lot of post stuff, but again, stuff will just get extended. And I'm curious. I really want to get a few real estate agents that are really following this stuff on the horn as well to get their opinion on it. But I'm pretty sure if I'm a buyer of a property as of today or as of whenever that was yesterday, I'm not allowed to go into the property at all.
Right.
Because I can't leave. I'm not allowed. I'm not an essential business if I'm just a regular person. So I can't go into the house. I can't leave unless it's for an essential purpose.
Well, and I find it weird that people are putting houses under contract virtually. I don't know if it was on here or somewhere else, but someone brings up a valid point. I literally want to smell the house to make sure the house doesn't smell, or like you walk in and there's like a creepy spirit over your shoulder or something crazy like that. I don't know. I truly don't think that we're in the age of virtual buying yet. I believe there's a lot of things that will happen to come forward. But if they start shutting these things down and forcing this hand harder and harder and harder, there's not going to be much of a choice. If unfortunately business, when you look at the government level, real estate is a big line item for them that makes the world go round. Transfer to recordation fees, mortgage stamps, recording fees. There's a lot.
That's why they don't want to. That's why they don't want to close everything, and they're not closing. And they're not closing everything. They're doing whatever the safety purposes are to prevent, some of the things, and that's it. But I'm willing to bet that come another 10 days, construction is going to be on hold too, just like Philly is. Because I'm seeing it in real time up in Philly based on talking to our clients up there and looking at loans and stuff down up there, and they have a much worse case than we do. So I think that's going to occur. And again, it's short-lived. And listen, the whole if you have to move based on necessity, like real necessity, meaning like you got someone moved into your house and you can't move into the new house. I get it, especially with tenants and stuff like that. Like with Jack, I'm guessing with Jack, most of his stuff's necessity. It's not like, hey, I don't really like this house anymore, I'm going to go move out. Like you're going to wait a few more months. So, I mean, again, like I don't think this is going to stay forever,
But I think that's a great option for the Airbnb operators that are looking for short-term rentals. That I think you can get some people, figure out how to market to them, and say, look, I know you got to move out of your house because you're already closing on it, and you got nowhere to go, and you don't want to go out and view houses right now because of this. I'm willing to rent my house for a short term because nobody's doing short-term rentals anyway. So, and are you really finding long-term renters right now? Probably not. So I think there's a good viable option, for somebody right there in the short-term rental space to capture some leads and offset some of their losses.
Sure.
So, but
no, I got you. So, all right. Well, I mean, there's going to be more stuff that's getting updated as time comes. So we'll have to follow up with that. But I mean, I think in general, real estate is, and again, like everyone's saying, it's business as usual. It's not really business as usual because it's slower, and it's like if you don't need to do it, don't do it. Obviously that's
right.
That's important. So I don't know. I guess we'll see where that goes.
I mean, I don't. Other than that, other companies that are essential, in the real estate world, I feel as though if you're in property management, almost everything is essential, especially if it comes down to mechanicals or life safety inside the house. From what we can tell, repairs are still considered essential because there is a need for people to move. I would like to read deeper on that blog post. Title companies are open, banks are open, mortgage lenders are open. So from what we can tell, everything seems to be open. I think it's still a lot more in your service.
I think if a transaction has to get done and it's got to get done desperately, you have the ability to do it. And if not, but again, like, listen, I don't think I don't know. It's weird because I see so many mixed things on it, because then on the other side, every property that I've seen get put under contract get put on the market, gets put under contract like within a week. Did Terry's place sell yet? Do you know?
I haven't talked.
I mean, he's got a ton of showings and he's had a lot of offers.
if
a
the
lot of
rumor
interest.
is true, I heard he had a ton of offers. So I think you're coming back into, the pent up demand and the people that truly need to move are out there and looking to move.
Yeah.
The other thing is, I think with everybody in their houses, the question is, do people say, oh my God, I got too much house and I don't need this, and I realize my wife has to clean this thing all day? Or do you get other people who are like, holy crap, we don't have enough room in our house, and when the market comes back on, we want to start looking again,
Yeah.
I
And keep in mind, like, if there's not a ton active, because there's not, like, there's not a ton of properties active. Like, it's still like, there's still bidding wars with buyers to try to get into a property. Like most neighborhoods, it's interesting, at least in median housing price neighborhoods. That's what I track the most, because those are the types of loans that we do on a regular basis, the median housing neighborhoods. So that's what I'm seeing. But like stuff, like Terry said, like there's not much in his neighborhood. So one came on and everyone wanted in. And if this is the time, they look at it as like, if this is the time I got to take advantage of it, I'll do it. And on one side of it, it's like, hey, there's an argument if you just wait a few more months, there might be some desperate sellers that need to sell, and then all of a sudden you get a better deal. And on the other side of it, it's like interest rates are low. This is the neighborhood I want to be in. The time is right. I don't think sellers are going to sell in the near future unless they have to financially, because one reason or the other. So who knows? All of this stuff is kind of the guessing game. I mean, the beauty of it is like as things change and adapt in real time, we all are knowledgeable enough to take notice of it and try to figure out, the best solution. And, we can kind of end this the way that we started was we're going to continue to be optimistic. And guess what? If I bought a property today and it's worth $20,000 lower tomorrow, well, guess what? I'm going to be optimistic because all of a sudden I got a good price on a deal. And then it drops again. I'm going to be optimistic and optimistic and optimistic. So like, that's just a mental mindset. And that's just, in general, what everyone should be doing is, if you look at a project or a loan or a property or self-storage or an apartment building or leasing a property, it doesn't matter what it is, whatever it is that you're involved in, it's, if I'm here, could it go to here? Am I going to be okay? Could it go to here? Am I going to be okay? Could it go over here? Am I going to be okay? Like we're all going through the exact same things. So I think we just have to make smart decisions. And, I think if you're knowledgeable and you're smart and, you're confident on the way that you're involved in stuff, you're going to win. And every article that I've read, obviously there's some doom and gloom stuff. And I get that. And I try to stay away from that. I mean, I don't want to just be optimistic and not look at the other case, but I tend to want to be optimistic and proactive and look on the bright side of things. And, every deal that we're involved in, I want to make sure we make the best, most responsible decision. And you're not going to win all of them. It's just not going to happen. Like you're going to have a bad apple. You're going to have some bad deals that you do, but you make a smart decision, and hopefully it's the right one. And and the thing is you do it as a long play, and you do what you can with the right mindset, and hopefully it works out.
Yeah, absolutely. Hey, that's all you can do is keep your head up, keep it rolling, keep it moving, keep your eye on your goal, make your adjustments you need to, protect what you have at home today, protect your business as best as you can. I think I sent you an article last night that was actually a really good read. It went over defensive and offensive type strategies you could be doing right now. And it went all the way down to the doom and gloom. Let assets go that don't fit your portfolio right now because they're going to weigh you down during all this and potentially crash everything you have. All the way up to offensive type things and of getting capital together and getting ready for what you believe is an upwave. And actually I think that's something we can talk about is capital during these times and getting some bankers and private lenders and those types of things on here. And there's a lot of stuff there's a lot of content out there. If you get through all the crap on social media, there's some really good content out there. Jason, you should share in this podcast. What's his name? Russell Brunson, the one he did on the coronavirus and the messages you should be sharing and what you should be looking for. That was a really good one. There's a lot of good opportunities you can do if you make minor adjustments in your business right now. I hate to use the word, but there's definitely minor adjustments you can do to make yourself better and ultimately help solve problems for a lot of people.
Yeah, and that's what it's about. That's what it's about. Like, we're going to be optimistic. Like, even if, stuff gets, real bad, worse and worse and worse and real bad, like, hey, let's stay optimistic. And we can talk about the money, the financing and the funding stuff. There's money out there. There's always money out there. I was reading some articles from the Private Lending Association, some blog posts that they put out today, and I shared it with our entire team. And there's still a lot of capital out in the marketplace, and smart money is out there. Obviously a lot of institutional lenders who wanted to deploy billions, hundreds of millions to billions of dollars aren't really in the space anymore. But private lenders, community banks, local banks, self-directed IRAs, hard money lenders that have their own capital, private capital, they're still available. Yeah, the terms might be different than you're used to. If someone was used to 8-1 or 8-2 or 10-1 or whatever, it might be higher than that. But guess what? You might be able to buy the property lower. There might be better profit margins right now, so it might end up equaling the same thing or even working out better. And it goes with supply and demand. So I think it's going to be hard if you're trying to find 100% financing right now. I don't think that's going to exist, and it might not exist ever or for a long period of time again. And I don't think it needs to exist. I think there's other ways to fund your assets without, with you putting skin in the game or doing partnerships with people or figuring out other ways in your capital stack to put up capital, maybe with a HELOC and then borrowing the rest, things like that. So, all right, man. Well, we'll circle back. We don't have a time yet for tomorrow's, but it'll be probably early afternoon. You're not working in the fire department tomorrow, are you?
No, I'm around. I'm off. It was my vacation, and I decided to utilize it, even though I had nothing going on, just to avoid all the crap at work. Andrew will be working up at my house tomorrow, so I'll make sure we can get him on. Gotta make sure the work gets done first, but we'll get him on, and we'll have a quick.
All right. Hey, if anyone thinks they have something valuable to share with the community, because that's what we are. We're all a real estate investing community between DC, Maryland, Virginia, and we also have a lot of viewers and followers up in the Philadelphia and South Jersey market. So that's good as well. So if anyone feels like they have something that they can share that will bring value to the community, nobody's selling, pitching. There's no gurus involved or any of this stuff. Like, we're trying to bring in good, valuable content as we see it in real time. So if you have anything you want to share, feel free to reach out. You can email me at jason@hardmoneybankers.com or Ian at equitywarehouse.com. And we'll check you guys live tomorrow.
See you guys.
Okay. Cool. Until next time.